Corporations posted record earnings in the first quarter of 2021. How will they follow that up? But it's more than just the numbers. We've got 3 things to watch this earnings season on this week's Fastest 4 Minutes in Finance. Hello again, I'm Scott Inman. Well, when it comes to predicting where the markets are headed, we always come back to the fundamentals. And there is maybe no more important fundamental than earnings. The health of a corporation should determine the value of its stock. And with Q2 solidly in our rearview mirror, it's once again earnings season. Using LPL Research as our guide, we expect the growth to be nothing less than record-setting again. The second quarter earnings growth could end up being the peak for this economic cycle. Take a look at this chart. Using the S&P 500 as the measuring stick, earnings were up 52% year over year in the first quarter, far exceeding estimates. So now take a look at the estimates for quarter 2. The expectation is a whopping 64%. Some of this would be helped by the fact that the comparison would be to Q2 of 2020 when the whole world was shut down, but economic growth, strong manufacturing activity, and the fact that 66 S&P 500 companies raised their guidance for earnings during the quarter may push the earnings growth even higher than estimates again. LPL Research believes we could see 70% year-over-year growth. We will be watching. Which brings us to the 3 things to watch this earnings season. Companies began reporting earnings this week, and along with the numbers, they will also provide outlooks for the second half of the year. Our first thing to watch is a little tricky, but we want to know, is this as good as it gets? The markets are a forward-looking mechanism. Investors are expecting big earnings. If they get them, and even if they exceed expectations, it might not move the needle too much in the market. Now, investors may be asking if the positive surprises are coming to an end. Ask another way, how long can we keep this up? But if the outlooks from management teams for the second half of 2021 stay conservative because of ongoing COVID-19 or other uncertainties, there could still be some upside surprises later this year. All right, our second thing to watch, the outlook for hiring. We know job growth has slightly disappointed in recent months. Factors include lingering apprehension for some workers to return to work because of COVID, childcare issues preventing some parents from returning to work, companies learning to do more with less by leveraging technology during the pandemic, and the supplemental unemployment payments that we've talked about before that reduce incentives to work. We will be watching to see what companies say about future hiring and what that may mean for revenue and profit margins. And our third thing to watch, the latest on the outlook for inflation. We've been talking about that debate over and over about inflation for months. Everyone agrees that it's high right now. We know that. The debate, though, is over how long will it be high. This is related to the jobs issue. If companies are paying more to get people to work, which they are in many sectors, it could hurt companies' profit margins. But wages aren't the only factor here. Continued supply chain bottlenecks and shortage of materials are pinching profits as well. The question is, to what degree? We will be watching what companies have to say about that. Bottom line is, earnings season should reveal more of what we already know. The economy is soaring back from the pandemic-triggered recession. But as always, there are potential headwinds to that soaring flight, and we will be watching to see if any of them are strong enough to slow us down. Thank you for watching.